most jobs, most employers offer 401ks, and those are the most like commonly used retirement accounts for when you retire.
Yeah.
And sometimes some employers even match whatever you contribute to your 401k. They'll match you at the end of the quarter, at the end of the year, maybe not.
Yeah. And usually how you contribute to a 401k is pre-tax earnings. So before, all that means is that before the money gets to you, they take a certain percentage off of that, of your, salary or whatever you're getting, and they put it into this 401k before it gets taxed by, the government, the state, whoever's, taxing you. So it's really a cool way to build some wealth, because if you were to contribute, money from your paycheck, it's already been taxed by whatever your tax rate is. And for 401ks, you get that added benefit that they're, not taxed already, your contributions.
Right, and you kind of get the chance to shelter some money.
Yeah.
From being taxed at the end of.
Yeah.
Yeah, I mean, you get to shelter some cash.
Yeah, exactly. And yeah, that's kind of another intimidating topic. Maybe we should do an episode about that, about lowering your gross income, because,
that's a great idea.
Yeah, because that gets, that's a little intimidating for people, but it can really help you at the end of the year to get some money back, or to plan for your taxes a little better. So.
For sure, man. And normally how you set up a 401k or how your job will do it, they'll kind of ask you what percent would you like to contribute.
Yeah.
And then from then on, once you set it up, it's just automatically deducted from your paycheck. So you don't really have to think about it again. Yeah,
totally. And then you talked about how employers might match your contribution.
Right.
I think it's pretty standard knowledge that if your employer matches, a certain percentage of your contributions, that should definitely be the amount that you contribute if you can.
For sure.
Because it's free money essentially. That if you're putting in 5% of your wages and they're matching 100% of that contribution, there's no reason why you wouldn't, unless you have a really dire need for that money elsewhere. So,
man, and I have a question for you.
Yeah.
Get your opinion, man.
Okay, let's see.
So I left my job. I left a job to come to a new job.
Yeah.
So I still have a 401k with my old job. So now I have two separate. Yeah. I hear all the time that I should
roll it over.
Yeah. I hear all the time that I should aggregate the accounts and consolidate them and whatever, but I've been lazy and let them stay separate. What would you do, man?
Man, yeah, that's a good question. I would say that there's probably nothing wrong with having two separate ones, but I mean, for a lot of things in financial planning, you want it to be fairly simple. And people change in employers all the time. So if you just contact, the HR department of wherever you work at, then you can get that rolled over pretty easily. I mean, it's pretty standard and pretty fast. So, I mean, it decreases your complexity. And Whittier offers, I don't know what, your last employer was offering, but Whittier has pretty good retirement plans. So it's good to, have the same options in both, in your 401k retirement planning, and just makes it a little simpler.